This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is September 22nd, show number 323. Well, is it a time to taper, Nick? Today is Fed Day.
Yes, today is Fed Day. This is when the Federal Open Market Committee concludes their 2-day meeting. They're going to make their interest rate policy decision for the United States at 2 p.m. East Coast time. After that statement, we'll get a press conference around 2:30 by Fed Chairman Jay Powell, and everyone is waiting to hear what Jay Powell will have to say regarding his $120 billion a month asset purchase program. As you know, this program has been going on for a while. A lot of people call it QE Unlimited. The EU recently did a minor taper, and we'll see if the Fed does one as well. Right now, I have to think with the markets coming under pressure in the month of September, I'm not sure he's really ready to pull the trigger on that, but we'll have to wait and see really what he says and more importantly, how the market reacts from the news.
All right. So if he does taper, what's going to happen?
Well, I happen to think that if he tapers, the markets come under more pressure. I just don't think the market is really ready for a taper. I think, almost like spoiled kids, where you take the punch bowl away, they throw a temper tantrum. I think that's what we'll see out here. The market's been under some pressure in the month of September. We did have a 5% pullback. And again, that seems to be the magic number these days. You pull back 5%, then you start to rally higher. But a few sessions ago on Monday, we did have that big sell-off, and markets are trying to bounce back from it. So I have a hard time. I think he's in a pickle here. I think he's going to have really some tough steps to walk right now as far as saying he's going to cut the program.
Yeah. And, well, but they have to pretend they're going to do it. Because at some point the currency is going to come under intense pressure, and they're going to definitely have to do it, right?
Yeah, what will happen is you're going to have yields start to move up, and when yields get too far away from the Fed, from the current rate, you're going to see that that's a big problem, and that's going to force the Fed's hand ultimately. I think that's how it's going to happen. I think the markets will force him to taper. I really can't see him going out on a limb and saying, "Hey, we're going to cut, by 10 or 20 billion a month until we're down to zero." We're not even talking about interest rates right now. We're just talking about a QE program where the Fed continues to buy $120 billion worth of U.S. Treasuries and mortgage-backed securities and sometimes some corporate bonds. So I really have a tough time thinking they're going to do anything at this stage.
Yeah, like we say, they're in a box, and every time they've tried to do it in the past or intimated that they were going to, the market has crashed.
Pretty much every time that the Fed has actually raised rates or, done something where they've cut their quantitative easing program, you saw it under the Trump administration. I think we raised it 5 times and the guy went back down to zero. So, he basically negated all that he's done. And then recently with the markets making new all-time highs and real estate market being at all-time high prices, you would think that he would start to cut the program, but he never did. And, they used the COVID story. The market's not ready. We have a dual mandate where unemployment is still too high. So, again, they always got some reason to not do it. But they're going to have to at some point before the market tells them and forces their hand to do it.
No doubt. They'll do it kicking and screaming. So what do you think the effect of Evergrande is? Is it still being felt? What do you think is going on with that?
Well, it's hard to know with the shadow banking system in China, but I have to think that the Chinese government is actually just going to absorb that company. They seem to absorb every company in due time anyway. And I just think that the problem, they don't want it to get systemic, so they're going to absorb it. They're going to throw money at the system. They're going to basically print money. That's what everybody seems to be doing these days. That's just the remedy. And if they do that, that's just more money in the overall global stock market.
I tend to agree with you. I think that the risk of just allowing it to collapse will will effectively be another Lehman type event. I hate using that because everybody's using it, but it to me, it's not really Lehman. It's more like subprime banking, subprime mortgages in the United States, because when they allowed the subprime market to crash, it took all of real estate down with it. So
It did.
Right? And that's what
did.
I see happening here.
Yeah, and the other problem is in China too, why they have to really absorb this company and bail it out in some sense, is because there's a lot of smaller Evergrandes. Nobody talks about that, but if there's one behemoth out there, there's many others. Before Lehman, there was Bear Stearns. Honestly, we could make a case if the government did not bail out, do this big bank bailout, you would have saw Goldman Sachs fail, and you would have saw Morgan Stanley fail. You would have saw Citigroup fell. Maybe perhaps it would even went to JP Morgan. But, and in history, we've seen this with China. They're going to step in there and they're going to provide liquidity and they're going to just take it over.
Yeah, I think there's an inevitability, because the idea of not doing it is going to be way worse than if they just take it over. In the end, it won't matter, right? In the end, it's not going to matter. Because it just can't matter, because you can't have these zombie companies with no threat of going out of business and expect a good outcome. But in the meantime, all the politicians care about is right now, how bad do we look, how much unrest is going to occur if we let this happen. And I just don't think they're going to. I'm with you, Nick.
I mean, I don't think there's any alternative. So, we'll find out soon enough, but the markets are in rally mode today. So, if there is if that has something to do with Evergrande, it is telling us that. Right.
So then the question is, really, I guess the question really is, how far will they let it go before they have to step in and really do something about it, right?
Yeah, I mean, already today, I did see news earlier that the bondholders are going to get a payment of some sort. So,
local bondholders, not the international one.
That's correct.
And that's a violation of all sorts of international treaties and stuff, right?
Right. But that just tells you they're trying to keep the peace in their own lands, right? They don't want disruption and they don't want people going crazy. After all, they're already, they've already kidnapped people and they have them held hostage. So, we're talking about, it's bigger than, the irony, it's called Evergrande, right? So
it's Nevergrande is what I call it. I call it Nevergrande.
It's Nevergrande and Evergrande. So, that's quite remarkable, though, that there's hostages involved and all sorts of stuff like that. And we're not really hearing about it in our financial media, but they don't report news these days.
Yeah, well, what's the purpose of the media, right? Definitely, it's just to state-run media espouse the party line and don't worry about it, right?
Couldn't say it any better.
Yeah,
that's exactly it.
Just keep shouting the party line and everything will be fine, right?
That's how it goes these days.
Yeah, well, good luck with that one. But hey, it's a mess. So what about Bitcoin? What's the next inflection point for Bitcoin?
So Bitcoin held its support level, got down to that 40,000 area. We talked about 39 to 40,000 would be support. So far, that's held up, and it's holding up to fight another day. But I will tell you this: when you look at the Bitcoin futures chart, and I'm looking at the daily chart here today, Bitcoin is up decently. It's up about $350 or so, sitting right around 42,500. If you take out that 40,000 level, be careful, because that's going to tell us you probably got another 10 to 15,000 point drop, and we'll probably see this thing get down to the 26,000 level.
If you got to take out that 39,000 area, you take it out, it's a failed pattern. It's already had a big decline from its climactic top on the 7th of September when it traded as high as 53,125. That day it closed at around 46,700 and actually traded down to 43,700. So
You had a big sell-off day. Now you got a little zigzag move down, and it's holding this 40,000 support level, which was a major resistance point in the month of July that it was able to get through. So, it's old resistance become new support, and that's where we are at the moment. But, you keep monitoring this thing, because if it starts to make a bearish wedge or sideways pattern, then it's telling you it's ready to make its next descent lower.
Yeah, well, the other thing we have to look at was it 2 weeks ago, it hit 52,000, and, then the dumb money poured into it, and then it broke down again.
Yeah, that's right. It was September 7th.
Yeah, that's like never a good sign there, is it?
No, never a good sign. And don't forget also, even on the 20th, today is the 23rd. So on the 20th of September, we saw a pretty big decline as well there, and that took us down to the 200-day moving average. Yesterday, Bitcoin actually closed a little bit below the 200-day moving average, and today it's testing back up to the 200-day moving average. Now, let me state this so everybody's clear. This is the 200-day moving average on the future chart, okay? It's not somebody else's 200-day moving average. I know we've got into this conversation before, but this is the 200-day moving average right up here, and it's currently sitting, as we speak, at 42,794. So we're just a hair below that level now, and that is also a little short-term resistance.
Mm-hmm. All right. Well, we will be following it. Yesterday, gold actually caught a bid, and it was looking pretty good there. So what do you think? Where's precious metals heading?
So gold has had an outstanding bounce the last two sessions. Today it's kind of pausing, which is natural. There's really nothing wrong with that. But you have the Fed speaking today, and that's always a big market driver for gold. It can move the gold market, their comments. So again, I don't love gold here at this stage of the game, but I don't hate it either. I'm really impressed with the move over the last couple of days. And overall, we'll see what the Fed says today at 2 p.m. But again, if they're very, very dovish, I mean, it's a good fundamental case for gold to get back to that 1800, maybe even 18 and a quarter. I think there's still a sticking point there of resistance, but we'll see how it plays out.
All right. Well, interesting. Yeah. So silver is having a nice day today. So what that means, I don't know, but it seems to me that whenever bad stuff happens, then we can look forward to gold getting smashed a couple of weeks before it. And then all of a sudden the bad news comes in and it goes back to where it was before. That seems to be the strategy of containment.
It does. I have to say, the last two quad witches, which were the quarterly options expiration weeks, gold got absolutely slammed. And we saw it in June, and we just saw it, a week ago, where gold got hit pretty hard on the back of options expiration. And, now it's starting to try to recover. So, I always look at charts, and I always try to follow the trend and try to follow the pattern. But one thing I've learned over the years, if you get what we call a failed pattern or a bearish chart that turns bullish, then it becomes very bullish. Or if you have a bullish chart that turns bearish, then it becomes very bearish. So, again, we're going to be watching this chart pretty closely, and I'll be updating everybody as always.
Yeah, so we'll just take time, analyze the trend. Obviously, if you knew what was going to happen here and you knew it was going higher, it would be a great time to get in. But there's no confirmation. You would just be pretty much trading on your gut at that point.
Yeah, there's not enough evidence, and that's what we want to look for, chart evidence. There's not enough chart evidence to tell us what is going to happen here. What I would say, though, is that it's definitely been a little bit more constructive as of late, but it still needs a lot of work.
All right. Well, I think we'll leave it at that. In any event, go over to inthemoneystocks.com, take a look at the site and see how Nick has beaten the averages all these years. And while you're at it, the Twitter feeds are at ITMS, at Nick Santiago01, at Kerry Lutz. The email address is kl@kerrylutz.com. Nick, we will catch up with you on Friday and hopefully have a better idea where these markets are heading.
Yes, sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.